we're trying to work out in aggregate what's going on. The NASDAQ 100's been an interesting index to track this week. The sort of anxiety of Monday faded. On a weekly basis, we're still soft at 0.8%. You've got concerns about growth. Then we got some economic data this morning that makes us feel that maybe recession risks are fading and we have a clearer picture on the Fed. When you woke up this morning, Sarah, what was your picture of financial markets?
Well, Ed, it was about the same as it was yesterday, which is reasonably optimistic. And that's a function of, again, so much liquidity added to the U.S. and global economies during and after the pandemic. And much of this is still working through the system. But we have still very strong consumer in the U.S. It's labor's holding up, wages are holding up. There isn't a reason to panic, even though markets do that from time to time. So we're looking forward to some good earnings from our companies. And for those, for example, in technology where they depend on industrial production, to be well placed.
Thank you for bringing it back to technology. This is Bloomberg Technology after all. I mean, it's interesting you go to earnings. The story was really clear from the hyperscalers in particular, right? The commitment to capital expenditures for AI infrastructure. Maybe in Microsoft's case, you learn the lesson that you just don't miss street estimates in this environment. How selective are you being within that group of hyperscalers or other names that we're so focused on around the AI story?
Well, the AI story is like, and this has been well encapsulated on our website by our portfolio manager for telecommunications, media, and technology, Brian Cho, and that's that there are 3 cycles. And this first one, building, is all about the basic building blocks, meaning semiconductors. And you certainly saw that in NVIDIA boom. But the memory semiconductor stocks have had a big run, too, as they should. They've had a pullback. They're very interesting. And then to your point about the hyperscalers, they're absolutely critical in the next phase, which is delivery. So we need them to build out the cloud infrastructure. And they're also, this is true of the ones that we as value investors prefer, like Alphabet and Meta, they're benefiting from their use of AI as they get more customer engagement. And a hyperscaler like Alphabet, not only do they have tremendous, they can look forward to in phase 3, the deployment, getting enterprises on cloud. Enterprise must have massive cloud access because they have so much compute needs with their data.
Monday was a global market event in the sense that it started in the Asian session, went to Europe and then to the United States. But it also shone a light on Taiwan and Korea, those markets. And when I was looking at your holding, Samsung really jumps out. You have a particularly strong view on Samsung. Explain the thesis there and where it sits in your holdings.
Well, you're correct. And Samsung is one of our, in both our international and global fund, one of our largest holdings. And the reason why is that Samsung trades at very reasonable multiples. It's trading somewhere around book value. We think it get to 1.5 times book. But they're a major player in memory semiconductors, and the need for memory as AI compute expands goes up multifold. So memory demand rising inexorably, which is great for Samsung in DRAM. They compete with SK Hynix and Micron. And Samsung's on the cusp, we think, of a major breakthrough in high bandwidth memory. So they will be able to provide the more advanced memory chips. And all of this emphasis on high bandwidth puts some pressure on regular DRAM, so there's some shortages. We'd like to see this. So the supply-demand balance is very much in favor of less supply and more demand, good for pricing. So Samsung's well-placed there. Plus, in this phase 3 of delivery, they've got, or in phase 2 in deployment, there they are with mobile phones that'll be AI-enabled. So those Galaxy phones should fly off the shelf. They have other consumer electronics. They're in foundry and display. Like Samsung has it all.
It's really interesting to hear you outline that. We've done quite a lot on the show about high bandwidth memory, and that if there's going to be this ramp and expansion of AI accelerator-driven growth, you have to have the corresponding high bandwidth memory. But we've not discussed it as much with the investor base. Sticking with chips, you also are interested in some of the more cyclical areas automotive, industrial. I look at some of the names that are outside the United States, Infineon, Renesas over in Japan. Why is it that you like that area?
Well, automotive, maybe there's been a slowing of auto sales, but the SAR doesn't matter so much. It's the content that matters, chip content. And these automotive-related semiconductors, and Samsung and Renesas, Samsung German, Renesas Japan, are experts in that area. So we are expecting them to see, again, content growth overwhelm or be more important than overall auto sales, barring a recession. And we're not expecting one anytime soon. But they're also very strong in industrial chips, and to see that in industrial automation. And then think about data centers and the need for power regulation. They're both really well placed there. And those stocks have fallen some 30+% over the last 1 month in the case of Renesas. So the value is there as well. So you get the undervaluation and the growth upside. It's a great combination.